Good afternoon again, everyone. This is Elizabeth Jennings with National Disability Institute. We're so pleased you're able to join us for today's MS Financial Wellness webinar, Favorable Tax Deductions for Individuals with Disabilities. The sponsor for today's webinar is Acorda Therapeutics. Today we're going to share with you some information about what we've learned over the past few years about the financial wellness of individuals with MS and the importance of economic empowerment. Then we're going to shift focus to talk about favorable tax provisions, free tax preparation, and a new innovation called My Free Taxes, where they're going to provide some next steps to offer a few suggestions that you can do over the next couple of months to assist yourself or to assist those you serve in securing free tax preparation. A few housekeeping tips before we get started. The audio for today's webinar is being broadcast through your computer. Please make sure your speakers are turned on or your headphones are plugged in. You can control the audio broadcast via the audio broadcast panel. If you accidentally close the panel, you can reopen it from the top menu item, communicate, and then join audio broadcast. If you do not have sound capabilities on your computer or you prefer to listen by phone, please dial in. The number is toll-free 1-855-244-8681, and the meeting code is 664-230-636. You do not need to enter an attendee ID to participate. Real-time captioning is provided during this webinar. The captions can be found in Media Viewer panel, which appears in the lower right-hand corner of the webinar platform. If you want to make the Media Viewer panel larger, you can minimize other panels like chat, Q&A, and/or participants. We'd love for you to submit questions to us during the webinar and even after. For questions and answers, please use the chat box or the Q&A box to send any questions you have to Nakia Matthews or Elizabeth Jennings during the webinar, and we will direct the questions accordingly during the Q&A portion to our speakers. If you are listening by phone and not logged into the webinar, you may also ask questions by emailing your questions to myself, Elizabeth Jennings, at ejenings@ndi-inc.org. We'd also like to let you know that this webinar is being recorded and the materials will be placed on the National Disability Institute website at www.realeconomicimpact.org/financial wellness. That site is also a great place for you to view other webinars we've done in this series that started earlier this year or series from the previous few years. If you experience any technical difficulties during the webinar, please use the chat box to send a message to the host, Nakia Matthews, or email Nakia at nmatthews@ndi-inc.org. As I mentioned, I'm Elizabeth Jennings, and I'll be your moderator today. I'm the Director of Training and Technical Assistance at National Disability Institute, and I'm very excited to be able to share this information with you today. Before we finally get into some of the content, I want to give a very special thank you to our sponsor, Acorda Therapeutics. Acorda Therapeutics has been sponsoring the MS Financial Wellness webinar series for the past few years, and they've been an excellent support in helping us get some critically needed information out to individuals with MS, to their caregivers, and to other service providers. So what is financial wellness? Why do we discuss this? Well, we define financial wellness as the state of a person's finances with the intent of working towards financial behaviors that limit stress and the impact of stress on one's daily life. There's a tremendous amount of research that indicates that when your finances are not in order, it creates unnecessary stress in your life, which, as many on the line know, can exacerbate symptoms of MS. We view that there are several components to financial wellness, including being financially literate, accessing affordable financial services, utilizing favorable tax provisions, which we'll be talking about today, budgeting, understanding public benefit rules, building and maintaining assets, accessing available health care subsidies, and understanding the impact of work on long-term disability provisions. There are some staggering estimates about the poverty of people with disabilities. For individuals without disabilities, this is a 2010 stat, but over the past 12 months, 12.8% of individuals without disabilities had income below the poverty level. For that same time period, for individuals with disabilities, the rate was more than 2 times that. It was 27.3%. So you can see that there is a high rate of poverty amongst individuals with disabilities, even more so than their non-disabled peers, which indicates that no group in America is more in need and or more deserving of economic recovery. Many of you on the line know that for millions of working-age adults with disabilities, a dependence on public benefits for income, health care, which is a huge one, food, or housing often becomes a trap that requires limiting income to remain eligible. We'd like for people to have great pathways to improve their financial wellness because we understand that even if you do need to hold on to a public benefit, there are opportunities to improve your financial wellness, which will impact your mental and physical health, impact positively your self-concept, change your status with other community stakeholders, and directly impact your quality of life. Before we started this webinar series a few years ago, we conducted a study with our partners at MSAA, and we learned from the several thousand people who responded to the survey that 55.1% of households with a member with MS earn less than $35,000 annually. 16.4% earn less than $50,000, but more than $35,000. When asked about the ability to pay all of their bills in a typical month, 32% reported that they have a very difficult time paying their bills, and 46.9% reported they have a somewhat difficult time. Also, 43% of respondents reported that their financial status has affected their ability to access medical care at some point. We also learned that almost 72% of respondents do not have enough savings to cover 3 months' expenses. That's a strong indicator that there's some need for renewed focus on financial health. 67% reported that their finances were worse since their MS diagnosis, and 73.7% reported that they were not aware of or had not used financial stability programs that we talk about through this webinar series, including the Earned Income Tax Credit, which we'll be talking about today, individual development accounts, family self-sufficiency programs, and Plan for Achieving Self-Support. You can learn about these by viewing some of the archives of the webinars we've done this year and in the previous years. And if any of these topics strike your interest and you're interested in more information than the webinars offer, you are always welcome to reach out to myself, Elizabeth Jennings, at ejennings@ndi-inc.org for more information and for connections to programs within your own community. There are many financial wellness strategies that exist that can be a support to you. We tend to bundle them into like opportunities such as financial literacy, budgeting, credit repair, and getting banked. And you can see there are many opportunities that we have listed on the screen. We will be talking today about the use of tax incentives, volunteer income tax assistance, the Earned Income Tax Credit, and volunteer income tax assistance programs. But if there are other financial wellness strategies that you're interested in, such as state Medicaid buy-in programs, some of the matched savings programs like individual development accounts, if you're interested in student loans, retirement accounts, efforts towards employment, self-employment, microenterprise, home ownership, benefits planning, any of the strategies that we promote, you are always welcome to reach out to us, and we'd be happy to make connections to you within your local community or even at the national level if necessary. So now that you understand the background of why we view the topics that we've chosen as very important and critical to the MS community, I'd like to welcome Don Dill with the IRS and invite him to share information with you about favorable tax deductions for individuals with disabilities. Thank you, Don, so much for joining us today.
Thank you, Elizabeth. Thanks for the invitation. I hope you can hear me. I apologize in advance to all the participants. Unfortunately, I'm having some technical difficulties and not able to join you on the webinar. So I apologize. We're going to have to do some manual requests to move slides, so please bear with me. Before I start, I want to first and foremost thank all of you for joining us on this call today. I'm hoping, as Elizabeth did such a beautiful job of framing the issues of why we're here today on this call, and I'm hoping the information I'm going to provide you is going to just get you, the starting points you need to look into these different avenues, as she suggested, these strategies into a little bit more detail. NDI, I want to, of course, thank them for the tremendous work they have done in these arenas over the past number of years now, and we at the IRS are very thankful to call them one of our great partners in this work of providing information to taxpayers in need about the opportunities, the tax incentives that are out there, and then in their tireless work of trying to not only promote these incentives, but trying to find ways in your local communities to make sure that everybody that's entitled to these tax incentives are able to access them. So thank you to NDI, and I appreciate this opportunity to talk with you today.
Thanks so much, Don. We're just thrilled to have you with us. Thanks.
Right. Well, and I'm going to move us on to the next slide, and we'll try to go through this, if we will. And I'm Nakia on slide 17. Again, I just want to take this opportunity and go through what we deem to be a number of favorable tax deductions for individuals with disabilities. There's going to be a lot of information, as you can see ahead. I'm not going to be able to cover it in this time frame in absolute line-by-line detail, but I hope, as Elizabeth mentioned there, these will be archived at the NDI site. So please, take the opportunity when you have the chance to go back and really delve into this information in more detail and make sure, if it is something you're entitled to and you're eligible for, that you do take advantage of each and every one of these incentives. So we'll move to the next slide, and let me give you a little bit of a background on where I sit within this complicated IRS structure. I work for a division of the IRS called the Wage and Investment Division that work primarily with taxpayers like yourselves, the individuals, the more than 123 million that file individual returns. And so I work in a unit called the Stakeholder Partnership Education and Communication Division. And what we are, if you will, is an outreach and education arm of the IRS. We like to think of ourselves as the good guys of the IRS, trying to get the information out to those in need. In addition to providing outreach and education to taxpayers in all income levels, we are also the organization that is in charge of the Volunteer Income Tax Assistance Program, or some of you might have heard it referred to as VITA, and the Tax Counseling for Elderly Free Tax Preparation Program. Some might also hear that as TCE, or many know it as AARP Tax Aid, who are the primary providers of the Tax Counseling for Elderly program. I'm going to talk more about those programs at the end, but safe to say they're important programs that are completed by community organizations and individual and volunteers at the local level. I'm hoping as we go through this, you'll find an opportunity to see if there's sites available in your community. So moving to the next slide on SPEC's business model, as you can see there very briefly, what we try to do is provide a multi-level platform to help taxpayers, and we work with 4 core groups: the low to moderate income, persons with disabilities, persons who have English as a second language, and elderly taxpayers. And what we're trying to do is provide them information about the tax opportunities, about their tax responsibilities. We then want to couple it with free tax preparation, because simply said, if you know about a tax incentive or a tax credit or benefit you're entitled to, but can't access it, then it's not nearly as valuable, obviously. And we want to not only make you able to access, but we want to access it in our world in a free level of service, which is, I think, the best kind. And then last but not least, what you're going to do when you go to one of these sites in most of our communities is work with some of our local partners who are going to provide you the financial education and asset building opportunities, much of what the financial wellness strategies that Elizabeth provided you at the beginning. It's a great opportunity to get the taxes done for free, get all the benefits and credits you're entitled to, and then hopefully, depending on your situation, if you're in the refund status, maybe using some of that refund money to start some asset building, some savings accounts. So a very powerful program. We'll talk more about it as we get closer to the end of my presentation. Moving to the next slide. I hate to even say this as an IRS employee, but I have to. I have to give you the disclaimer that the application of tax law is very individualized. It depends on the facts and circumstances of each and every taxpayer listening to this information. So please utilize the information that I'm going to go over today. Utilize information from NDI's website. I also give you the IRS website there at www.irs.gov to determine how these tax laws and benefits and credits I'm going to talk to apply to your individual situation. We'll hope as I complete this presentation, you'll take an opportunity to consult with one of our local volunteers at a free site, or if necessary, talk with your tax professional about these because some of them can be very complicated. So with that, I'll go to the next slide and talk about here. What we're going to focus on today is about the tax benefits and credits that are available to individuals with disabilities. There's also obviously individual tax benefits and credits that are available to businesses and corporations that work with and serve individuals with disability. But today we're going to focus on tax benefits and credits for individuals with disabilities. And you'll see here we're going to hopefully hit parts that impact folks that not only are qualifying taxpayers with disabilities, but also those with parents of a child with disability. So hopefully one of these buckets will fit your individual circumstances and provide you information that you need. Moving to the next slide, there's the tax benefits and credits that we'll focus on today. As Elizabeth mentioned in her opening, one of the key ones we'll really want to focus on is the earned income tax credit. And I noted in her presentation there that from their study, we were showing that up to 73.7% of the people said they might not have been even aware of the earned income tax credit, which hopefully by the end of this call you will certainly be aware of and take the necessary steps to make sure if you're entitled to that you do receive that credit. We'll also talk about medical expenses, impairment-related work expenses for those individuals working with a disability, credit for the elderly or disabled. And then secondarily, we'll move into how a couple of those things impact those parents among us with children with disabilities, what medical expense deductions they can take. We'll also talk about a child and dependent care credit, and of course, the earned income tax credit once again. So some detailed information to follow, and I'll try to keep it at the highest level possible, but I think as you see some of this information, you're going to realize it's going to get fairly complicated, and that's why the disclaimer about individual facts and circumstances. So moving on to our next slide about tax benefits and credits for individuals with disabilities, I just want to go over some really beginning concepts. I know many of you are probably not tax gurus. Not many of us like to make that distinction or refer to us as some, but just want to get some of the overall background information out for you so that when I use my acronyms or shortcuts, you'll understand what I'm talking about. But tax benefits, when we refer to those, many people also call them, you'll hear people talk to them about tax expenses, deductions, and or exemptions. And generally, these are amounts that you use on your tax return simply on a dollar-for-dollar basis to reduce what we call your taxable income. And that taxable income is also important at the end of the day. Whatever your final taxable income amount is, that is what you use to determine what your tax liability is. So for example, if you had $20,000 of taxable income and the tax rate was 10%, then your tax would be $2,000. If you were able to take some tax benefits, expenses, deductions, or exemptions we talk about, and take, for example, you were able to reduce your taxable income by $500 or $5,000 to make it a little bit easier, bring it down to $15,000, then your tax liability would, at that 10%, would be $1,500. And so a savings for your $5,000 of expenses of $500 in taxes. A very important thing, but you'll notice when we go on to our next slide, when we jump over to tax credits, they are a little bit different. Tax credits are a dollar-for-dollar reduction of your tax liability. And so generally, tax credits can be used to the extent to remove part or all of your existing tax liability down to zero. So when I talk about a tax credit, for that example, if you were sitting with a $2,000 tax liability that I mentioned and you had a tax credit of $5,000, for example, I told you if you had a $5,000 benefit, you would just reduce your tax liability by $500. But if you had a tax credit of $5,000, that would negate your tax liability of $2,000 in full. Now, what you see in that second bullet there is there are a couple situations I'm going to talk to you about today. Most of the time, you would say if you had $5,000, if you had excess credits, for lack of better terms, you would lose them. But in a couple special circumstances, particularly the earned income tax credit fully and in the child tax credit in a partial way, those tax credits allow you to not only offset your tax liability, but in the example I just gave you of the $5,000 credit, reduce your liability of $2,000 to zero, you have $3,000 remaining. The IRS, on the behest of the Treasury Department, would send you as a taxpayer a $3,000 refund. So you can see when we talk about the credits like the earned income tax credit, how incredibly powerful they are, how important they will be to financial well-being in the long term. And so that's why we're so appreciative of NDI and their partners helping us get these kind of calls so we can get this information out to you today. So I'll jump into the next slide, and of course, for tax purposes, for those of you who have a tax background, or even those who are listening to the debates in Washington and our communities around the country, our tax laws are extremely complex and voluminous. I think the tax code now is upwards of 2,500 pages. So I just wanted to go for purposes of taxes, which is certainly different from many other requirements, but for tax purposes, there is on the screen your definition of what a permanently and disabled person is for tax purposes. And that is, and of course, again, those of you who have worked with us in tax-related issues know there's never a simple answer, but it says a person is unable to engage in any substantial gainful activity by reason of medically determinable physical or mental impairment, which can be expected to result in death, or which has lasted or can be expected to last for a continuous period of not less than 12 months, for tax purposes, would be considered totally disabled when we talk about some of these tax laws. So again, I apologize for the complexity of the law. That's what it is. That's why I, again, go back to the need for you to make sure your individual facts and circumstances are checked by a qualified individual to help you do that. So let me now, with those background information, jump into a couple of these credits, and we'll try to move a little bit more quickly. I know we've got a lot of information to share with you, and I want to make sure we get it all in. So right now I want to jump into what you've heard a couple times now from myself and from Elizabeth, the earned income tax credit. And this is a well-labeled credit for the IRS. It is a credit for those who have earned income. Earned income, as you'll hear in the next couple slides, is income generally from wages, for working for somebody, W-2 job, however you might refer to that. Or if you're self-employed and own your own business, that would also be considered earned income. And so what people like to say is the earned income credit rewards those who work. So those who work and fall below certain income thresholds then have an opportunity to avail themselves, have earned the right to claim the earned income tax credit. And so for the upcoming filing season, and this will be a little bit of a confusion in some parts, we're entering in January to the 2014 filing season, but you'll be completing the 2013 tax return. So next year, when you try to file your return, if you have income below $46,227, as you see there on your slide, with 3 or more qualifying children, you will be eligible to claim some amount of the earned income tax credit, and we'll talk more about how much that might be. You see there's a different amount if you're married filing joint. The $46,000 would be if you were single or head of household. You see there now drop down with 2 qualifying children, an income level of 43 and change 137. And one that's probably very important to many of us on the call today, and it's often not known or not spoken about. Most people think of the earned income tax credit available for those who have children, but there is a credit. It's a smaller credit, but nonetheless a credit that helps reduce your tax liability for those who have income below the $14,000 threshold, single there, or $19,000 and change with no qualifying children. So something, if you fall into the category, please pay attention, and we'll go over some of the more details you might need on that. So jumping to the next slide, again, as I mentioned when I talked briefly about credits versus benefits, this is a refundable credit. And so as I mentioned, that means if you have an amount greater than your tax liability, at the end of the day, you'll receive a refund from the IRS. So we'll hear more about that. Jumping to the next slide to get into some of the amounts that we're looking about for the upcoming filing season 2014. As I mentioned there, we have a couple of buckets for folks' eligibility, and each one of those buckets has a different credit amount opportunity. And so when I see there on this slide, you'll see in the middle for a couple with 3 or more qualifying children, the maximum allowable credit is $6,044. And so I need a disclaimer here right now. We don't have enough time to go into all the complexities of it. I don't want anybody to leave this call thinking that if you had income below the threshold that I mentioned back there of approximately $43,000, you had 3 qualifying children, you're going to get $6,044. What the tax EITC is, it really, if you will, if I had a graph up here, it is on a bell-shaped curve with your income starting at 0, the credit builds until it reaches a maximum $6,044. Generally, for somebody with the income range around $20,000 to $25,000, and then it goes down, if you will, on the back side of the curve, down to $43,000, where the credit would get smaller. So again, you know, it will be an individual facts and circumstances, but at the end of the day, potentially there's $6,044 left on the table. So I don't think I have to explain to you much more about the opportunity that kind of refund might do for anybody that's eligible for it. You see there on the slide then for those with 2 qualifying children, I'm sorry, the maximum credit, $5,372. So moving to the next slide, the last 2 buckets that we talked about, for taxpayers with 1 qualifying child, the maximum allowable credit, $3,250. And last but not least, as I mentioned, for those individuals or even couples with no qualifying children, the maximum allowable credit, $487. So as I mentioned, much smaller for a single individual or married couple with no qualifying children, but nonetheless, a credit that will certainly help each and every one of us who are entitled to it. So please, we'll talk more about it. So let me move to the next slide, and as I mentioned on the onset, here's some of the definitions of what is earned income. As I mentioned, mostly you'll hear that earned income is, wages and income you receive as an employee for an employer, or those for self-related individuals, self-employed individuals, I'm sorry. Their income they make from that business would be considered earned income. But many of the other types of income that you might be aware of, whether it be interest income or dividend income, would be considered unearned income, not generated by working or creating employment. And so I wanted to add into there in this discussion, obviously, on this call of importance, most disability-related benefits, including the Social Security, the SSDI, are not counted as earned income for purposes of the EITC. I know for many of you that will limit your opportunities, but I did want to make sure we are aware of that. You see in the second bullet there, long-term employer-paid disability benefits are potentially considered earned income, so there will be individual circumstances that we'll have to go into there. And just for purposes of our discussion, when you have a married couple, only one of the spouses needs to have earned income in order for them to qualify for the EITC. So if you have one working spouse and another not working for whatever reason, and the one working spouse has earned income, then, and they qualify, as we already talked about the income threshold, then they would be eligible for the credit. So again, very complicated stuff, but we wanted to get you some at least broad understanding so that you can ask and further explore on your own. Moving to the next slide is definitions about qualifying child. Obviously, that is, as you can see, a very important piece and really raises the bar on the potential for those seeking the credit. So to have a qualifying child, and for tax purposes, it has a specific definition. Many of you might be thinking in individual circumstances unrelated to taxes, whether you have a child that you're caring for at your home. They may or may not, depending again on the individual facts and circumstances, be a qualified child for earned income tax credit. Knowing that you are providing the well care and protecting the well-being of that child is great, but unfortunately, within those 2,500 pages of tax code, there are specific definitions. So what I wanted to do, obviously, you can see their relationship is important, son, daughter, brother, sister. One of the key things that often requires or makes people ineligible is an age requirement. And at the end of 2013, in the next couple of weeks, obviously December 31st, the child has to be either under the age of 19, the age of 24, and a full-time student, or the most important part for this call would be that the child was permanently and totally disabled at any time during 2013. And then, if you will, that throws the age requirement out. So many of you on this call, that may be something that maybe in the past you had not aware of that. You've heard of the earned income tax credit, but your child was over the age of 19 or 24 and was permanently and totally disabled, and you thought you weren't eligible. You would be if you meet the other requirements. So we see on there a residency. So again, more information for you to look at there when you get a chance, but we wanted to just go into some of the highlights on the qualifying child. So moving to the next slide on the earned income tax credit, having the pleasure of working with NDI over the years, Elizabeth and her colleagues, when we first started going out and talking about the earned income tax credit, one of the first concerns was when people saw the numbers that I flashed earlier, a potential of a $6,000 refund. They were very concerned. They were, of course, thrilled to the opportunity to get $6,000. But the second question came very quickly: what's it going to do to my potential eligibility for other benefits. And believe me, with the great help of NDI, we have learned and we have preached that we understand the importance of the eligibility for other benefits for financial wellness for your family and for you as an individual. So we don't want to jeopardize that in any way. So when we talk there, you see on that slide, for federal law purposes, generally the EITC will be excluded as additional income in determining eligibility for other federal public benefits, including SSI, Medicaid, Veterans Benefits, Head Start, just to name a few. A critical, important information for you to be aware of. I know many, having worked this issue with NDI over the years, oftentimes that is information that is given to you falsely and well-intentioned, that people are aware, they're afraid that if you get that you'll be excluded from some of these benefits. So I want you to know for those purposes for federal law, we're not going to include it as additional income. Now, EITCs are refunds, however, are not considered employment income and have no impact on substantial gain activity. So I know most of you on this call know tremendously more about all these items than I do, but I just wanted to give you those overview issues there so that you'll have those available. And again, as I mentioned, you'll look at the individual facts and circumstances when you look at your individual filing requirements come January of this year. So moving to the next slide, continuing that theme on the Earned Income Tax Credit and the benefits, obviously the second leg of that stool would be on resource testing. And there is a short-term exclusion of EITC and child tax credit refunds in terms of their impact on resource testing. As you can see there, they are excluded for SSI purposes for 9 months following the refund, the month the refund is received, so you do have time. And for Medicaid purposes, some states have voluntarily increased the allowable holding period for EITC refunds. So again, I don't have the time within this call to go over all the individual states and the opportunities. As you know from fighting with this issue over the course of the time you have had to deal with this, it is very complex. It's different state to state, but I just wanted to give you the broad understanding that an EITC refund for most intents purposes will not automatically disqualify you from those necessary benefits and eligibility that you need. So again, as I wind down our discussion here on an overview of the Earned Income Tax Credit, I hope you will certainly look into the potential eligibility. I didn't mention in this eligibility for those of you on the call today when light bulbs are going off in your head going, I am eligible, and I have been eligible for a number of years, whether it's you individually or as a couple or with a qualifying child who's disabled and above those age thresholds. You would also be able to look back for 3 years and see if you were eligible in those other years. And if you've already filed, file amended returns and get that refund for those prior years. And if you haven't filed, I would suggest that you get onto that as quick as possible filing. So the Earned Income Tax Credit is a tremendous financial wellness opportunity. And so the one thing that I want to leave you before we move to our next part of the presentation is that you have to, as a taxpayer, make an affirmative claim for the Earned Income Tax Credit. Unfortunately, whether your income thresholds look like you appear to be eligible for the credit when you file a tax return, the IRS will not give that to you automatically because you, as a taxpayer, have to affirm that you meet the eligibility requirements for that. So again, please get in and look at your situation and get the information, study some of these slides that I've given, look to NDI's website, nirs.gov, for more information. So let me transition to other tax benefits and credits. They may not be as valuable on a dollar basis as the EITC I talked about, but nonetheless, still important for you as you try to certainly reduce any tax liability you might have to its lowest lowest denominator. So talking on the next slide about medical and dental expenses, again, as I mentioned, these are tax benefits. They can be deducted from your taxable income. And these can be medical and dental expenses for you as a taxpayer, for your spouse, and your dependents. And there you will see on there medical expenses include payments for a host of things: diagnosis, cure, mitigation, the whole opportunity there. Also in bullet 3, you see it also would include cost of equipment and supplies. And the fourth bullet, last but not least, one that folks often forget about, is the cost of transportation needed to attend to the medical care. And in many cases, I know many of us on the call, that is a big number, because you are required in the circumstances you face to seek out medical care very often. So potential opportunities there for some additional deductions. Moving to the next slide, continuing those on, I wanted to just give you on that side a couple of highlights of potential allowable medical expenses for individuals with a disability that maybe you hadn't thought of, expenses that you probably incur on a day-to-day basis and never thought about for tax purposes, because a lot of us don't like to think about tax purposes, and I understand that. You see there, Braille books and magazines would qualify under medical and dental expenses, car expenses, modifying a car with special hand controls, guide dogs or other service animals, hearing aids, eyeglasses, and wheelchairs, just to name a few. Just want to give you some examples to get your mind thinking of what we might take in your individual case as a way to lower your tax liability. So moving to the next slide, again, continuing on medical and dental expenses, or dental expenses that might be allowable. Additional expenses here that might be eligible for, you might be able to claim, again, continuing on, whether they're education expenses, telephone equipment, television equipment. Again, just a host of opportunities that maybe you weren't thinking of when you hear the term medical and dental expenses. So I'll move to the next slide. Again, here's a more detailed one that also qualifies for consideration of a qualified medical expenses for tax purposes, and that would be capital expenses related to the improvement of your home to make it accessible for a person with disabilities. So you see examples there, constructing entrances or exit ramps, widening doorways or hallways, adding handrails, grab bars, installing porch lifts, and other forms of lifts. So again, I think oftentimes we are misled by the fact that the only way we think medical and dental expenses are the direct costs we pay to say a doctor or a hospital, but in the case of a person or families facing issues related to disabilities, there are much broader potential for deductions related to that. So if I move to the next slide, here comes some of the disclaimer type of information. I've given you the good news about what medical and dental expenses you might be able to consider to reduce your tax liability. Here's how you do it. And so medical and dental expenses are claimed, for those of you who are familiar with what some of our tax forms, on what we call the Schedule A itemized deduction. And again, as I mentioned at the onset, this is a tax benefit, so it's going to reduce taxable income. So that's where it'll come in. You'll accumulate all your itemized deduction. Other itemized deductions that you might be aware of are charitable contributions, mortgage interest, real estate taxes. So you'll combine them to determine what your itemized deductions are. Unfortunately, one of the drawbacks on medical and dental expenses are that in order to claim those, you have to have more than 10% of your adjusted gross income in order to claim the medical and dental expenses. And for those of you who are familiar with taxes, that number has increased, unfortunately, this year. In years prior to 2013 tax year, that was 7.5%. But just to give you an example, if your adjusted gross income, the example I gave at the very onset of my remarks, was $20,000, then your 10% of that would be $2,000. So you would have to have medical and dental expenses in excess of $2,000 in order to get benefit of those. So if you had $2,500, then you would be able to get $500 benefit. So it's in many cases a steep hill to climb, but again, we want you to explore all the avenues that you have. The last bullet there, and I'll go into a little bit more about this on the next slide, says that some of you may not have claimed itemized deductions in the past years because it's an either-or in the case of taxes. You either can claim your actual itemized deductions, or you can claim what is known as the standard deduction, and that amount has grown over the years, and so in many cases you benefit more by claiming the standard deductions. Let me go into a little bit more of that as we move into the next couple of slides. As I said there, gave you some information about what's included in itemized deductions. But the standard deduction is based on an individual's filing status, single, head of household, married filing jointly. And this will determine what that level is. And then that is what you'll use to compare what your actual itemized deductions are to see which benefits you more. So as I jump to the next slide, there gives you the numbers that we're talking about for 2013. So just to give you an example, go to the middle of the page. If you're a married filing joint taxpayer, meaning a husband and a wife legally married, as a married filing joint couple, you're entitled to a minimum standard deduction of $12,200. So automatically taken away from your taxable income. So in order for you to reap the benefits of itemized deduction, you would want to have accumulation of itemized deductions in excess of $12,200. So that would mean an accumulation of your medical and dental expenses we talked about in detail, added to your mortgage interest, your charitable deductions. So you can see in many cases it's a pretty high bar, which is a benefit already to you, but it does provide you opportunity, particularly if you've had very major expenses, and particularly in the medical and dental side of the house, that can add up very quickly. So that's why we wanted to go over that. So again, going on to the next slide, just wanted, as you saw on the slide previous there, I noted there were some different amounts that actually increase your standard deduction. If you, or in the case of a married filing joint taxpayer, your spouse, are either blind or partially blind, that increases that standard deduction amount as you saw on the previous slide. So again, opportunities out there, and that's what we wanted to do on this call, is to give you some overview of opportunities. So let me turn to another one of the tax benefits that I noted in the beginning of my presentation. That's impairment-related work expenses is the title of those. And simply said, that's for employees who have a physical or mental disability, and this is, again, tax law, and I apologize for some of the language, that limits their being employed, or physical or mental impairment that substantially limits one or more of their major life activities. If you qualify under those that definition, you can then deduct impairment-related work expenses. And so on the next slide, we talk about what are impairment-related work expenses, and those would be what we love to use for those of you who have worked with us in tax law over the years or are in that business. One of the most favorite terms in tax law is ordinary and necessary. So there's ordinary and necessary expenses in order for you to work, including such things as attendant care or other related expenses that help you to be gainfully employed. So an important opportunity there, before we move to the next slide, an opportunity for you again to get an additional tax benefit or credit for those expenses that you incur in order to work. So again, I think that's one that maybe in some cases you might hear about that in passing, but there's not a lot in the tax in day-to-day tax discussions that you hear that, and that's why I wanted to cover that. Moving on to the next slide, I'll quickly go into a credit for the elderly or disabled. This is another potential credit. This one is not a refundable credit like the earned income tax credit that I spend most of the time on because of the benefit, but nonetheless, it's a dollar for dollar reduction of your tax bill, so it's worth exploring. And so it's potentially available to individuals who are age 65 or older, or those who are under the age of 65 but are retired on permanent and total disability. So there's some of the requirements for that on that slide. And we'll move to the next slide. And again, I think as you've joined us on this call already, you know nothing is simple. Here's some of the definitions to qualify for that potential credit. You'll see there that about the permanently and totally disabled definitions there. So again, not an easy computation, but one nevertheless I want you to look for. And as I jump to the next slide on credit for the elderly or the disabled, the credit will be computed by using a schedule R, part of the 1040 series, or Schedule 3 for those of you who file for a 1040A. And you'll see there, unfortunately, as you can tell already, I think you've seen with credits, there will be income limitations. That's obviously the newest way that the tax law is being administered is through income limitations. So you see them there for those trying to be eligible for that. So as I watch my time slip away, I'm going to try to go through a couple of these more quickly over the next few minutes so we can make sure we get into the information on free tax prep. So moving to the next slide, looking there at child and dependent care credit. Again, this is a dollar for dollar tax credit that reduces your tax bill. It is not refundable, but nonetheless, it's a valuable credit. This is basically a credit that you are eligible for when you incur expenses in order to allow you to work. And so you'll see there, generally that credit is if you have a dependent, more on that terms of that qualifying child, we talked about an earned income tax credit under the age of 13. But if for those of you who have a spouse who is physically or mentally not able to care for themselves, and again, apologize for the tax language, but I wanted to give it to you the way you'll read it in other publications, or a dependent who is physically or mentally able, regardless of age, then you would also be potentially eligible for this credit. So moving to the next slide, there's the test that you'll have to meet. Again, you'll have to have one or more of the qualifying individuals. You have to keep up the home, and then you'll have to have that earned income credit, or at a minimum be looking for work in order to qualify for that. Moving on to the next slide, more definitions and rules. Again, there's some of the individual rules that you'll need to know about when one qualifies under the physically or mentally unable part of that credit. So again, I apologize for moving too quickly, but I want to make sure we have time to get to questions and to get to other things. So there is how you would claim the child and dependent care. It's on a form 2441. There is a limitation. Again, I think you're not surprised when you talk about tax law. The eligible expenses that are the $3,000 if you have one qualifying individual, or $6,000 if you have two. And moving to the next slide, then once you have the qualifying children expenses, then the credit is a percentage, and it's a sort of like the earned income tax credit. It's a sliding percentage. Starts at 35% when you have an income threshold of $15,000, and then slides down to 20% as you near $43,000 of income. And so you see there again a material credit, maximum credit for one child, $1,050, $2,100 for two. So jumping into another thing I wanted to go into quickly, some taxability of disability benefits. I'm sure an issue many of you face and are concerned about. I wanted to just briefly go over those. And again, individual facts and circumstances, I implore you to look more closely at than just the generalizations I'm giving you today. So generally, benefits paid under disability policy are generally included in the recipient's gross income to the extent the benefits are attributable to employer's contribution. So what that's saying is if you have an employer that buys a disability policy for you and circumstances cause you to collect on that policy, if they, as the employer, have paid for it in full, then that income would be taxable. But then what you see on the second slide, or second bullet, is that if you have a policy, a disability policy that you paid for, then those benefits are not included in your gross income. And so, unfortunately, if you have one where you are contributing and your employer is contributing, you'll have to do a check to see which part of it would be taxable and non-taxable. And moving to the next slide, there is what the rule is called is a 3-year look-back rule, which will be used to determine what percentage of your benefits will be deemed to be taxable based on the thresholds of the percentages provided by you, the employer, and you as the taxpayer. So I apologize, that is a lot of information we've given to you. Again, as Elizabeth said, and as I mentioned, great opportunities on the NDI website to look at more information about this. And also, as I mentioned, at www.irs.gov for more information about these credits and benefits that you might be entitled to. So let me jump quickly into a couple things that I mentioned at the onset about SPEC. What we do is try to give you information like I've done about tax benefits and credits, tell you what you're eligible for, and then what we want to do is couple those with free tax preparation. And what we have is in the 2 programs I mentioned, VITA, Volunteer Income Tax Assistance, and Tax Counseling for the Elderly, TCE or ARP Tax Aid, you'll see. We offer trained and certified volunteers to help you get your taxes done for free. I can't think of a better offer you can get. For those of you who have paid pay preparers over the time, that number can jump up very quickly into some very significant hundreds of dollars, if not even more. And so we have been doing this program for 40-plus years now. I hope you've heard of it before, but maybe haven't made yourself available. There were more than 12,000 of these sites throughout the country, and more than 3.4 million returns were completed last year for free for taxpayers across the country. So moving to slide 55, these free tax assistance programs provide you not only free federal tax preparation, but also in almost every site will give you state income tax returns done for free. They'll be filed electronically for you to help expedite the processing by IRS, and they'll provide you a bunch of different opportunities for direct deposit options, which I hope you avail yourself to because it allows you to get your refund, one, without paying any fees to anybody for any type of refund anticipation loans or checks that you see advertised, but also allows you to get that money very quickly from the IRS, generally less than a week. Again, what we want you to know is if you find a site in your community, and I'll tell you at the end how to do that when you go, here's some of the information you need, because I can tell you if these sites are busy, as you saw, over 3.4 million people served with a fairly small volunteer base. So they are busy sites. So if you can bring all the information so you can be one and done, get in and out, you see the information you need there. Just basically anything you would need if you were going to a pay prepare, ID, all your income sources, particularly information about any children that you would be claiming on the tax return. So moving on quickly to slide 57, here's a couple of ways that you can find where a site might be located near you. Hopefully word of mouth that you've heard about it, but if not, go to irs.gov and look up our VITA locator tool, which will be coming up once we click into the next calendar year. So Unfortunately, right now, today, they won't be, but if you'll come back and look next month, it'll be available. You can also call an 800 number there that I list. We're going to have an IRS To Go app that will be available on smartphones starting in 2014. And then I included a site there, our friends at ARP Tax Aid. They do about half of those 12,000 sites. They have their own information on where their sites are located on their website, and you see the link there. So hopefully you'll take the opportunity once we go into 2014 and take a look. I will tell you that there are income thresholds. Generally, it's that upper income threshold that I gave you for earned income tax credit. So if you say less than $53,000 of income without too many complex situations like owning a business or owning a farm, if you're an employee and earn less than $53,000 of income, will basically be able to do your tax return free, but you can find out more on irs.gov about specific requirements. And then for those of you who can't avail yourself to one of our free sites, we're going to give you, I wanted to give you an opportunity within the IRS website, the irs.gov system, to avail yourself to what we call a free file. And this is where the IRS is partnered with a number of software providers to provide taxpayers an opportunity to do their taxes for free on through the IRS website, through third-party vendor software. So that's on Free File. My friends at NDI, after I'm finished, are going to jump in and give you some opportunities that they've worked with, and I'll let them talk about it. So again, I apologize for how much information. I wanted to make sure I left you with information that you can go back and look at, you know, once this call is done, when you have opportunity to study this in more detail. Again, I wanted to leave you with a couple of resources, irs.gov, as I mentioned a couple times. But once you're on there, there are two great publications that are specifically designed for individuals with disabilities, and one is a publication 3966 titled Simply Living and Working with Disabilities. Gives you some good information about a number of the tax benefits and credits I've discussed earlier. And then IRS publication 907, which is an updated little publication each year on new highlights for tax benefits and credits designed for persons with disabilities. So as I move to slide 60, on my last, there is my contact information. If you would have more questions that I could help you with, by all means, feel free to contact me. Again, please utilize the resources that NDI has provided you and irs.gov. But I wanted to thank you again for your participation on this call, and I wanted to thank Elizabeth and the folks at NDI for having me. And so, Elizabeth, I will put it back to you at this point.
Thank you so much, Don. That was a great overview. Even I, who have heard these presentations multiple times, learned something new today. So we're really grateful to you and to the IRS for the continued partnership and the excellent information today. Thank you so much. And your patience with the tech issues. Very hard to tell there was even a challenge at all. So I'd now like to introduce you all to Jamie Robinson, who is on the line. Jamie is a part of the National Disability Institute staff, and she has been working on a project called My Free Taxes, which is a great, another great way for you to do your taxes for free. So thank you, Jamie, for joining us today.
Hi, Elizabeth. Thank you. Hi, everyone. And I, too, want to thank you, Don. Just a wealth of information. I'm kind of living in the tax world here, but I'm so grateful to be able to just listen, take it in, and, you know, really great resources. Thank you. So My Free Taxes, let's see. Let's start with the My Free Taxes partnership. We are a group of agencies which really is driving this promotion of the My Free Taxes software, as well as driving folks to have access, increased access to free tax preparation. And we're made up of the National Disability Institute, Goodwill Industries International, as well as the United Way worldwide. And our organizations work collaboratively kind of on all levels, from national, state, local, regional, and we also work very closely with the IRS. We really couldn't do this work without that partnership. The myfreetaxes.com actual software is a self-filing software for taxpayers who earn $58,000 or less, and it is really the only software in which a taxpayer can file both their federal and their state taxes for free in all 50 states. And the goal of the MyFreeTaxes partnership, again, is to help drive millions of families and individuals to be able to access different options of free tax preparation to increase their overall financial stability. There are just so many credits and such great information that Don talked about that people are just not aware of, particularly in the disability community. So, you know, a huge part of this initiative is really awareness and helping to get this information out and supporting people to use different options like self-filing. So to qualify, again, income less than $58,000, that's for your household. You need a functional email address because you do need to be able to receive information and back from the IRS through that email. You need a valid Social Security number or ITIN, no foreign income, and you need kind of a basic computer awareness, and that really means that an individual can kind of navigate a mouse, basic keyboarding, and I do mean pretty basic. We had a lot of tax coaches out there last year, and many people felt the software was very intuitive, and you know, some people were pecking at the keys a bit, but they got through it and were self-empowered to file their own taxes. So you really just need the confidence to give it a try if you meet those requirements. And if you do get stuck and you don't have a tax coach, like I just mentioned, you could access our national hotline that United Way runs. And here you can see it, and the customers using myfreetaxes.com can also engage in a live chat or email to get assistance that way. And if you did get stuck, you could call that number and reach somebody to help you with maybe a software question, and you could also reach folks who are certified coaches and volunteers through the IRS's VITA certification process, and they could answer tax-related questions. So there's a lot of support, and we had probably over 90% of the people who responded to surveys last year said that, you know, this was definitely a way that they could file their taxes, and they not only plan to file it next year this way, but they're going to tell their family and friends to do it too. So I would encourage you to give it a try. And with that, I'll turn it back to you, Elizabeth.
Thank you so much, Jamie. Really appreciate your information on MyFreeTaxes, and just another way for those of you on the line to file your taxes for free. So we're providing you options at many different income levels to be thoughtful of the many different income levels that we all live at. I do want to make sure that people got some of the information that Don shared around the impact of tax refunds on public benefits. I have to give an apology to Don because I did review the slides as we developed this presentation together, and I did miss that there had been an update to the amount of time that tax refunds would not count as income or resources against any federally funded public benefit program, and they did increase that time to 12 months. So my apologies to Don for not catching that, but this is relatively new provision as part of the American Taxpayer Relief Act of 2012. So for anybody there who's kind of a legislation junkie and wants to take a look at that language, I gave you a link to that act that you could take a look at it. But for those of you on the line that are in receipt of any public benefit that is funded even partially with federal funds, so SSI, SSDI, food stamps, any kind of HUD housing benefits, and there's many, many other public benefit programs that may come from your state but actually do receive some federal funds. So for any of those programs, your tax refund will not count as income. And if you hold onto that tax refund, it will not count as a resource for 12 months following the month of receipt. This benefit to your public benefits is another great reason why you should consider direct deposit. When you direct deposit your income tax refund, it provides a very easy way for the public benefit program to be able to recognize the funds that you received and where they exist. So you don't have as much of a challenge when you're trying to prove that it's been less than 12 months since the month of receipt. You're trying to prove that the funds in an account are indeed part of a tax refund. I gave you a little bit more detailed information for anyone on the line who may receive SSI. As all of you know, SSI is an income-based program, and so we can feel even more stricter restrictions when we're someone who receives SSI. So not only is there the Taxpayer Relief Act of 2012 to support the fact that SSI will not count as income and will not count as a resource, but it's also in Social Security's policy manual, and the links have been provided to you on this slide. It's also great to know that when we're talking about tax refunds, we're talking about the Earned Income Tax Credit and the Child Care Tax Credit as well. So if there's any concern that anyone on the line has around the impact of their tax refund on public benefits, as always, it's a great opportunity to reach out to us, to let us know. I'm happy to send you the legislation and to connect you with tax coalitions in your local area who can be of support to you. Also, as Don mentioned, tax time is a great time to look at savings. So there's multiple opportunities that you can look at. Of course, as we mentioned, direct deposit is the fastest, safest way to receive a tax refund. An e-file tax return means a fast refund. And when you do that with a direct deposit, we understand you'll get it in as few as 10 days, maybe even within the week, so that's really wonderful. Also, at tax time, you're able to do some split refunds. So it could be a great way if you're new to, say, the Earned Income Tax Credit, and those are some funds that you didn't anticipate, to use this as an opportunity to deposit some of your refunds into a savings account, and that would be a great opportunity for you to either start a savings account or increase your savings. Also, savings bonds are something that you may want to consider. Taxpayers can purchase Series 1 savings bonds for themselves and up to 2 other individuals, and then the remainder of the refund will be provided via direct deposit or a check. But as we've mentioned, we really want to encourage you to look at those direct deposit options. So at the end of each of our webinars, we like to give you some suggested next steps, just some action steps that you can take as somebody who's gained this information and may want to use it in a proactive way. So we'd really love to encourage you to take a look at how you file your taxes and consider one of the free options. You could look at Avaya site, you could look at Free File, and please forgive me, everyone, I should have put My Free Taxes on here as well. But those are 3 great options for you to file your taxes for free. Then, of course, please make sure that you file your taxes in a timely manner so you don't have any penalties or charges that may come with not filing on time. Set a goal for yourself over the next 4 months, so just in time for you to get it done in time to meet those April deadlines to complete steps 1 and 2. And then typically about midway through the year after our webinar series, we like to reach out to see what people did with the information that you received through these webinars, and we'd love to hear your experience and whether it worked out for you, or we especially like to know if you hit any barriers that prevented you from taking a next step and how we might support you either through webinars or through some one-on-one assistance to overcome some of those barriers. We also wanted to just touch base with you again back to some of the resources that Don provided. So when you pull up the archive of this webinar, there'll be plenty of resources for you throughout, or if you want to skip to the end, you can capture those resources all at once right here. And again, my contact information is available to you so that you can reach out to me if you have any questions. So Don, we have several questions that have come in for you, and we're going to dive into those now. The first question is around the definition of disability for the IRS. I know that at one point in the slides it referred to offering a doctor's note, but people did wonder, how do you prove that you have a disability, and do you have to be receiving a Social Security benefit, SSI or SSDI, in order to prove that you do indeed have a disability as defined by the IRS?
Thanks, Elizabeth. Great question. And I hesitate even to delve into it. It's very complex because there is no magic bullet. There's no simple definition I can say to you when you qualify. For example, the latter part of the question, certainly Social Security income SSDI is not the beginning and the end of the discussion. It would be a factor as well as a doctor note or something. And what I would most likely say is that, it's not something at the beginning. It might be something that if you claim a credit or benefit related to that somebody might ask you for, it's not something you're going to have to put on the return or bring with the return at the beginning. I mean, I certainly don't want to encourage you, if you're not meeting those requirements, to do it, but it's not something that you'll need at the time of filing. So very complex, and that's why, unfortunately, the tax law is so vague on this stuff. And our good friend, for those of you who've done some of these webinars with us, Steve Mendelson, who does great work with NDI, a brilliant tax attorney, will tell you that that's probably the hardest question to answer. Continue to read at those facts and look at your individual circumstances, and hopefully that'll do it. I just unfortunately just can't go beyond those general guidelines in giving an answer. I don't want to mislead anybody or make any affirmative decision based on individual facts and circumstances.
That's understandable. Thanks so much, Tom. Another question that came in is, does earned income include Social Security disability benefits or private disability insurance payments?
No, it does not. For determination of whether you're entitled to earned income credit, no, it does not.
Great. So that was the next question, is will it count towards the max limits of earnings for EITC? So no, it will not.
No, it will not. Right.
Great. What is the time frame when you need to file an amendment?
Well, that's a great question. It's a 3-year window. So right now, technically, a 2012 return was due by April 15th of this past year. So you would have time to look at that 2012, 2011, and 2010. So it's generally a 3-year window depending on where we are in the time frame. But right now, you would have the ability to amend 3 returns. There's a 3-year, if they will, statute of limitations.
Great. And another question is, I had a bathroom remodeled so that I no longer need to step over the tub. Can that be deducted?
Again, and we should I guess I must have a bigger disclaimer. I am not giving you tax advice here. Based on the facts and circumstances, it certainly sounds like if you're doing that because you're dealing with a permanent and totally disabled individual, that would be one that would be considered. Now, for somebody who does not have a permanently disabled member of their family, of course not. But even though it might be more convenient and more appealing to the eye. But it's all about the need for the person with disability in order to do that. So again, unfortunately, I'm not going to give you a yes or no. You won't be able to put that in your return. So, well, Don Dill told me that on December 18th. You'll have to make the facts and circumstances. But it sounds like, based on the broad parameters, that that would be one that would be close to being a medical and dental expense.
Great. So we have another question that's fairly complicated, Don, but I don't think it's quite as individual.
Okay.
So if you worked part of this year and
Right.
you then became disabled and began to receive disability checks. Do you claim the disability income on your tax returns?
Well, I'm going to take that in two parts because I like that question, and thank you for whoever asked that. One was I wanted to get a plug-in for the earned income tax credit. One of the things I failed to mention is that you don't have to work a full year to get the earned income tax credit. In the example that this question brought, if you would have only been able to work for 3 months, whether you've lost a job due to a disability incident or you were fired or laid off or whatever, it's just the total amount of earned income credits or earned income you have during the year. So, you know, if you work for 3 months and have $12,000 of income, you know, you would be eligible. And one of the examples I said, if you worked in January and made $40,000 for the month and didn't work the rest of the year, based on our discussion, you would potentially be eligible, even though if you had worked for the full year at that number, you would not be. But the disability income question then goes back to my discussion on taxability depends on who paid for the disability policy, whether it was the employer or the individual. That's the deciding factor, not the length of time that you worked or something. It's who paid for the disability policy that is providing the benefits. So if it's paid by the employer, it's taxable. If it's paid by the individual, then it's not taxable. If it's a shared contribution, then you have to do that 3-year look back that I discussed in there. So a great question, and one certainly if that's your circumstance, please look into that in more detail on both those fronts.
Thanks, Don. Another question we had is, I have not claimed the earned income tax credit before, but I believe I am eligible and was eligible in previous years. For how many years can I request the earned income tax credit?
Right, that goes to that earlier question. It's a 3-year window, and I have done many returns of individuals that, like the question proposes, where they've gotten you know, $3,000, $4,000, or $5,000 refunds per year for all 3 years. So please, you know, get out to your VITA site when it opens in January, or you know, you certainly could see a tax professional in between because you know you could get it quicker. On the prior years, you won't be able to file 2013 until at least January 31st next year, but you can file the amended return at any time, today, tomorrow, or any time before the statute runs on April 15th of each year. So if you think you fit that category, please make an affirmative check of that issue and have somebody look at that with you. It's very important, could be worth a lot of money.
Don, we have a follow-up question to the question of how you prove you have a disability according to the IRS rules. And I think the question goes to what kind of information you would have a doctor put into a letter. And if that's too technical, it's one we could answer later in post with the archive.
Yeah, I think maybe that's probably a better idea.
Okay.
You know, I would almost have to get with Steve on doing some of that. He'd have much better information. I mean, I would just be able to give you the IRS, and to be honest with you, there's not a lot of detail in there in terms of in the IRS code about what qualifies for that. There will be a regulation or two, but it is a very vague area of tax law. But let's try to work on getting some better information. I apologize for being evasive on that, but I just don't want to give somebody feeling like they're going in one direction where I cannot speak on individual facts and circumstances.
No problem. I think that's great, and we'd be happy to follow up with you and with Steve,
Right.
who I'll reach out to myself, and then we'll
Great.
post that answer for everyone on the line with the archive of the webinar, just to offer. Actually, I really appreciate the question prompted by the individual who asked it, because it does provide great technical assistance, not to just to the folks on this line, but to our greater network who will also share the answer with.
Great.
So we did get several thank yous, Don, so I want to extend an additional thank you to you. For those of you who have asked through the web chat, we will be posting an archive of this webinar. We're going to have it closed captioned, and then we will post it for individual use. It will be available through our website. It's realeconomicimpact.org/financial wellness. So please check back for that. If you are interested in receiving a PDF of the PowerPoint slides from today, just shoot me an email. I'd be happy to send that over to you right away. That email again is ejennings@ndi-inc.org. Again, those slides will also be posted with the archive, so they will be available to you very shortly. So thank you again to Don. Thank you again to Jamie. Thank you to all of you for participating today. This wraps up our Financial Wellness webinar series for 2013. We'll be back again in 2014, so please watch our listserv and check out our website for additional information. We'll also be launching at least one, if not two, e-learning courses next year targeted towards individuals with MS, one on budgeting and one on Social Security disability insurance. So be sure to check back with us. It's been our pleasure to serve you this year. Another thank you, a sincere thank you to our sponsor, Acorda Therapeutics, who makes this information possible. Thank you again to Don and Jamie and everybody. Happy holidays.